Hi traders, here we go again. It's non-farm payroll day. It's Friday, the first Friday, first full trading week coming to an end. It's first Friday of the new year. Well, it's not really the first Friday, it's the second Friday, but it's a bank holiday where I was last Friday in Scotland for Hogmanay. But here we are. It's non-farm payroll day today. Apparently, it's going to be clean data. Still some skepticism around how clean it is and how extensive the surveys have been from the BLS, the Bureau of Labour Statistics. So don't get too carried away, guys. Stocks were up mixed yesterday. Actually, this is the chart next to me is the hourly chart of the Dow. So futures are higher this morning. The industrials. The Dow was up yesterday into close 0.55 of 1%. It's the best performing of the three major indices yesterday. You can see a strong up day again yesterday from the big down day we had, that tweezer top on Tuesday, Wednesday. So an up day again Thursday. Still an engulfing candle, so that's technically quite weak still. So see how we finish the week. We're in the upper half of the Bollinger Band here. We've already been outside of the Bollinger Bands this week. But we are pushing higher. New intraday all-time highs yesterday before we sold off on the Dow. The S&P 500 was flat yesterday. 6,921 the cash market closed yesterday, having been lower. But we are above this area we've talked about all week, this key high level from the intraday high we had on the 30th of October, which is our all-time high. Then we've got all-time highs on close on Tuesday. Then we got intraday all-time highs at 6,964 on Wednesday for the S&P, and then we've been flat yesterday and flat again this morning, but we are positive into non-farm payroll. And finally, the Nasdaq 100, 25,566 at the moment. Down yesterday. The wider Nasdaq was down 0.44 of 1%. Update on Tuesday, consolidating here on Wednesday. And again, quite shy of its all-time high from the similar date, the end of October there. So 25,000 moves to 26,000 as the upside. The extended fib level of this last down leg is 26,500. If this leg is over, this last one here, see this? So we've had a leg and then a leg within a leg. So if we do another fib level here and see where the Fibonacci levels sort of consolidate, you can see that's brought down our extension to 26,000. So 26,000 is a significant target to the upside. It's where the top of the Bollinger Band is. We got these other fib levels coinciding at similar levels, so that makes them stronger resistance and support levels. So this is a key resistance level and support level where we are at the moment. And then the midline of the Bollinger Band there, the 20-day moving average, you can see sits right on this 61.8 of that leg, and it sits on the 38 point, actually the 50% of this shorter leg here. So a key support level there at 25,400 for the sake of round numbers. But we are still bid. The Nasdaq perhaps less than the other two because we've got this wave on the midline moving average. Right, I just realized you got my great big Bonson bald patch staring at me. There we are. bigger chart for you. So let's just go through them quickly before we get to the data. It's 5 minutes away. Crypto continuing to struggle to get over 92,000 Bitcoin. It looked like we were doing quite well on Monday. We went to 94,000 over the key 92. But Tuesday we were down. Wednesday we breached back under the key 90. Well, I'm saying key. It's key for me. And 95 is the next upside level to the downside. Down again, sort of positive-ish day to yesterday, having tested into the 20-day moving average. And then we're down again today. So we're back into the 90,000 level. So the channel continues to hold for Bitcoin on the crypto market. Right, let me just jump to the euro. Actually, I'll put up the dollar CAD today because we've got the Canadian jobs data at the same time as non-farm payroll breaks. Bearing in mind the strong uptrend, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We're into our 10th consecutive day higher for dollar CAD. The loonie weakening, quite in line with the volatility we've seen in the oil market. Oil up again, has gone up today. There's a big meeting in the White House today. 20 plus energy executives meeting with the president about how they're going to carve up Venezuela. The big pie, the world's largest oil reserves, controlled by the White House. Free marketeers, eh? What can I say? Anyway, dollar up against its nearest neighbour, the Canadian dollar, into a key 138.80 resistance area we talked about a while ago, didn't we? We're right in there now, and there's that big down day we saw on the 5th of December. So next up target is really 39.50. So 39.80 and then 139, then 139.50 and then 140 to the upside. How will this react to the data that's about to drop? So let's have a look at the detail on the data. If I just bring up, actually, I'm going to bring up investing.com's calendar because it's got the other details in it. Ours doesn't show you that. So this is the big data dump we got now. Obviously, the key is the unemployment rate expected to decline. Remember, this rallied to 4.6%. This was not a record high, but it hasn't been this high for a long time. So back to 4.5%. The other one I keep my eye on, guys, is, as you know, if you follow me at all, is the wider unemployment rate, the U6 measure, 8.7% last time. Again, upgrade pushing higher. The headline number, it keeps going up this week, 64,000 here on the investing.com calendar. I think that's the Reuters poll. Last time I looked at the Reuters poll, though, 66,000 was the consensus. Bloomberg's consensus is a bit higher at 70,000. So hence there's going to be a bit more variance in this about how clean this data is and how accurate the actual count has been. But many are looking at this as the first clean since the government lockdown, the longest US government lockdown in history, thanks to the intransigence of the two parties, and obviously the president's got to take some responsibility for that, obviously. But anyway, so earnings 3.6%, rising still. Monthly earnings, December obviously skewed because of the seasonality and the extra bonuses seasonal workers can get around the holiday time. So 0.3 of 1% for December is what's expected. The annualized, I say, 3.6%. 66,000 for the headline number. Participation rate expected to stay the same at 62.5%. That's key because that's how many people are wanting to get back into the jobs market. The work week, where's the work week gone? It's not on here for some reason. They must deem that as a single calendar event. But weeks works is also, it's actually not, I can't see it on there. Can you see it on there? Interesting result. We got housing starts as well in a couple of minutes. So yeah. So Canadian rate 6.7%, much higher unemployment rate. It's likely to spike up again. Possible decline in the jobs in Canada. We did have some better than expected data out of Canada early in the week, but hasn't really helped the loonie, has it? So if we just bring the dollar CAD back up as our key trading asset here on the 5-minute time frame. So been strong since 12 o'clock for the last hour and a half. We've broken out here on the 5-minute time frame, but the dollar's been strong all morning. So we've got 2 minutes. Let me just pop to the other major. So dollar yen 157. It's got to the higher time for the hourly time frame. You see the dollar's been bid this morning. So dollar yen, we're actually long this from yesterday. Here you can see, actually on this platform, I've closed out the whole position. But on my trading platform, that was target one that we got in yesterday down here at 156.78. We got out at, I think, 40 odd pips. Half the positions closed, and the stop loss is now up here. Our entries down here, so it's guaranteeing a winner. I might move that up a bit higher again, get a bit aggressive here. So 57.40 or 57.39, I think I'll do that. I'll change that on my trading platform as well. But that's the stop loss here. So if that gets broken, we'll have closed out the second half of this long trade. So basically, dollar is having a good run. Key resistance is this 157.80 area. Again, we talked about on the higher time frames. If you flick this up to the daily, you can see This is the top of those candles here, 157.80. So we're having a go at that today. See what the non-farm payrolls does. And remember, we got the University of Michigan as well later on. So a key end to this key first trading week of the new year. Any questions, guys? Anything else you want to look at? Let me know. That's the dollar CAD sterling. We're still long on that one. Short on that one. Again, you see the stronger dollar here on the hourly chart. We look at the daily time frame. So the trend from Christmas, certainly against the euro, is very much in. That last leg up we started January with for cable, taking us to 134.50. Up to 135.50, I should say. We've been then since brought down, and we're back under 135. We're still short, and this is still open as our target, our first target there on my trading platform. I'll just demonstrate it here for demonstration purposes here. So that's very much in the money as well from yesterday, and you see we're into our fourth consecutive day lower, relatively big candle as well, breaching below that big up candle there. Obviously, the next target would be around about this cluster there at 133.75. That level there, you see that level there? If we get to our target, there could be some resistance, so we might burst through our target. But anyway, see how that pans out. 13.31. So the data's dropped. Let me just take us to the euro on the 5-minute time frame. It's been going down. There we are. Big spike down on the data, 16.25. Let's just bring the calendar back, see what we have got for the US data. Inflation, unemployment, U6, that's what immediately dragged my eye to 8.4%. That's a good reading. 3.8% for earnings. They will be liking that, those that are in jobs. 50,000, so it's a miss. Last month is also revised lower from 64,000 to 56,000. Headline is missed at 50,000, so that's right bang on the lower end of the range. Actually, it's below. It's just ahead of the lower range of the Wall Street analysts was 25,000. It's coming at 50,000. So that's a significant miss. Remember, we started the week at 59,000, so we're still 10,000 under that expectation, but 16,000 and 20,000 under the Bloomberg consensus at 70,000. So that's quite a significant miss from the headline point of view. Interestingly here as well, private payrolls are much weaker at 37,000. So this tick up we saw in the PMIs for the small businesses isn't carried through with the private payroll data. So again, there may be some dirt in this, what is deemed to be a clean reading. But certainly that's a heavy earnings number. So those in work are doing relatively much better than those looking for work. 3.8% for average hourly earnings on an annualized basis, up from 3.6% last month, and that's been upgraded from 3.5%. So the the monthly numbers come in line with expectations at 0.3 of 1%. So that's pushed that. Hence, that's pushed that higher as well. And this has been upgraded as well from 0.1 of 1% for November to 0.2. So it's doubled in a sense. So that's a key thing. Building permits also actually quite positive. Also all the way back from September. But that's more positive data. So disappointing numbers, but it doesn't mean the market is collapsing. Anything but. Look at the unemployment rate, better than expected, 4.4%. So we're getting back to this full employment. So those it's getting those back in. So participation rate, as you might expect, has dipped a bit, 62.4%. So there are obviously still vacancies, as we saw from the JOLTS numbers, but it was that was also at a 14-month low earlier in the week. The ADP disappointed, and now non-farm payroll has disappointed at 50,000. So how the market is taking that. Just pull that down into this. Put that in there. It won't go. There it is. The euro initially dipped 116.25, but the euro now is ticking up. But the big move is to the down, has been to the downside on the higher time frame. So be careful about that one. Whether we've taken out one of our my stop loss, I'd just moved on Sorry, actually, it might have hit target, that one, actually, the cable one. No, it didn't. It reversed. There we go. That's the risk of, see, what were we? We were, I don't know, we had $13 up, weren't we, on that? And that's the risk of our trades open during this volatile situation. We made money, but a little bit there on that. So it's the stop loss, which I moved down, has taken out. Let's just have a look at that. So actually would have taken off. No. Why is that close? Oh, right. So it's obviously spiked to where that I'd pulled the stop loss down earlier, and that's taken us out. So we've made some profit, but sterling coming back now on that data. So we didn't quite get to our target. Let's bring it down. See the reaction, and there we are. Our stop loss was a bit. I can't remember where it's not, might not be marked on that. So a measure. So we were 34.36 taken out, and we exited at 34.36.1. So just it's been rounded up a tad. So dollar weakening on that big miss for the headline for non-farm payroll, added to the fact that it is clean data. It's obviously weighing on the dollar. So if you have a look, it probably hasn't updated, but remember the expectations is like nothing's going to happen at the next Fed meeting, the 28th of January. This is 88.4%. It was like this yesterday as well at this level. So no chance of a change in January ahead of that data. See if that probably hasn't updated yet, because this is a free. I think it only updates every 15 minutes. This run at. So yes, so it's 7. You see there it says 7:26. That's before the data's come out today. So you can see data as of the 9th of. So we'll come back to that in a minute and see if that's changed at all with an expectation of going the other way, because that's sort of a confirmation of the weakening jobs story. It's another tick in that box. Remember, the ADP miss, JOLTS was weak. Weekly claims was really strong though, but non-farm payroll weighs more, and that was a miss at 50,000. So if we just actually, if I go to the Forex calendar here, and we look at the chart here, you can see this here. It's a nice little graph. You can see if we ranges, you can see it's been pretty. I'll zoom that down there. If we then go that way, you can see it's been a declining reading. And again, if we take the trend, down, we're down to this 50,000. But how big an issue is it really? But 4.4% of the unemployment rate. That's something the White House will be banging about. But you can see the decline. The trend is set. It's declining even before Trump arrived, doesn't it? So the impacts of the president's, the many are argued, it's somewhat limited, much more limited than they expect. That trend is continuing. So headline has missed expectations. So just going back to the Canadian data as well, that's sterling. Just have a quick look at the Canadian. Canadian data is coming better than expected. They actually did have some job production, 8,200 new jobs in December for Canada, but the unemployment rate went in the opposite direction. So we got the diversions between Canada and the United States as the unemployment rates ticked up north of the border there. So if we go back to the dollar CAD, which we had at the beginning of our, where's our dollar CAD gone? Our dollar CAD, see how that's moved. But you can see, there we go. That's somebody's asking me, is it all right to take a trade before the data? This is the risk, guys. Remember, big volatility. This is obviously the 5-minute chart. So You can see, I mean, it's not that, it's exaggerated on these shorter times, but we've been as high as 134.49 and as low as 133.98. So a sort of 40 odd pound pip volatility just on the non-farm payroll. And that's why everybody gets quite excited about trading non-farm payroll. Looks great on paper, but spreads can widen, liquidity can dry up quite quickly. Sometimes around this time of the of the month as well, even though it is non-farm payroll in the US are in full swing. So watch, be careful trading these news events. Again, dollar initially was bid, as we saw with the euro going down to 138.90. But we're now back down to 138.75. So a small move, 15 pips to the downside on the sort of absorbing of the data. I haven't actually got the yields on here. 118 for the 10-year. So that's actually ticked back up, although come down on the data. So it's been drifting higher this morning. 10-year yield in the US government, 4.18%. So there we go. Big old news event, big surprise. Well, not big surprise, but it's a relative surprise. It coming in 50,000. And as you saw on the calendar, on the chart there from Forex Factory, you can see the trend is continuing to the downside, but this 50,000 level is becoming a bit of a, sorry, let's just bring that down. The 50,000 level is becoming a bit of a pivot area, isn't it? If we take out, we are. So, we're just sort of this 50, 60,000 range. We've been running around since the summer, since that dip down in August. We've had one higher and one lower, one in November, one in December, cancelling each other out, the extremes. But we've see how the average for the 5-6 months, or the last 6 months, is around about this 50, 60,000. So that's what is driving the US economy still. And we'd still had really good earnings, hadn't we, for the third quarter. So obviously the final quarter is October, November, December. These three here. October, November, December numbers. And we'll see what earnings start to look like, because they kick in next week. The big Wall Street banks kick off the fourth quarter earnings season for 2025 from Wednesday next week. If I just bring up another free site, which is really good, Earnings Whispers, another free site, guys, doesn't cost anything. Obviously, all these sites are paid sites, but these are free. So the earnings season kicks off on Tuesday the 13th. JP Morgan, the Wall Street's biggest bank, are first up. Delta Airlines and a Bank of New York also on Tuesday. The following day is the other, some members. We got Bank of America, Wells Fargo. You see, there's not many, but these are significant players in the United States stock market, and how many ordinary people as well as institutions own shares in these companies, these big financial entities on Wall Street. So Wells Fargo, Citibank, Bank of America also reporting the following day on the 14th. And I think Goldman Sachs, Morgan Stanley are the Thursday next week. Let's go to Thursday. Yeah, so it's only 8 companies reporting, but again, significant players. TMSC, remember that the world's biggest manufacturer of chips, report also early in the day from Taiwan. Morgan Stanley, Goldman Sachs, BlackRock also reporting on Thursday. So by Thursday, all the major US banks, the big, will have reported. And we'll get a proper feel of how we're going to go forward. Remember, they kicked off the third quarter season and everyone sort of followed through. The earnings were particularly good. Wells Fargo is now one that was a misser. It quite often disappoints Wells Fargo, but the big ones Certainly Citi and Bank of America and JP Morgan were all better than expected. So when Tuesday, Wednesday, Thursday, key days for the stock markets, these big financial institution reports. So watch that if you're a stock market trader. And obviously that has a feed through both to the currencies and the treasury markets as well. So dollars continuing to decline. Here we are 15 minutes into after the data. CAD is down to 138 138.70 dollar yen, 147.40 into a key area we'd had before, 157.40. Sterling, as we saw, has bounced back, closed out our short position we'd had. Actually, yes, because I've moved the stop loss down, hadn't I? So it's closed out the whole position. So that's whole position is closed. Dollar yen, I don't know what happened there. I can't remember what we did with the stop loss. As that's been hit off, we got a bit too aggressive. No, that is also we've moved that as we talked, didn't we? That's also taken out. So the second half of that trade's also been taken out as well on the volatility of non-farm payroll. That's one of the risks, but doesn't matter. We got in all the way down here, dollar yen. I can't remember where we got. Is that where we entered? What was our stop? Yeah, our entry was here, and that's a stop loss we pulled up. So that's closed as well. I'll update all of this on the our Discord channel, guys, later on. So that's that done. Indices, let's have a look. They should have, as dollars weakened, indices should have ticked up. Indeed, they have. There's Nasdaq moving up again, sort of started positively and then moving higher. Position close over that. It's our short on the Kiwi. Remember we were short this one. That's come back, taking us out as well. So that's target, presumably target one. I can't remember what I did with the Kiwi. I brought the targets down. So that's target one closed out for that one. So the Dow's up. Nasdaq's up. The Dow's also up in this hour. Let's come back to the fight. Like for like, so 5-minute rally. Where's the data? Data dropped here, 130. So we've gained. We were already running higher on the 5-minute, and the S&P, similar pattern one would expect. Yeah, 96946 now for the S&P. Go up to the higher time frames, and there's a big up candle on this data. So unemployment down, U6 unemployment down. Headline non-farm payroll has actually missed expectations. 50,000 is the headline number, and the detail isn't great either. Private payrolls only 37,000, had quite a significant miss from the 64,000, and weaker than last month at 50,000, which has also been revised lower. Unemployment, though, falling to 4.4%. And the wider U6 unemployment rate, which I take great heed in, is another tick down, more significant because it's a wider measure, 8.4%, but still over 8%. And participation rate has slipped a tad as well. Strong housing starts data, though, still relatively strong. Housing permits were good, and housing starts actually missed a tad, 1.6 million. So overall, that's mixed data, but the significant unemployment down, earnings up, jobs missing expectations, but still around this 6-month average we've just seen at 50,000. You know, a couple of years ago that would have seen a major headache, but with all the changes that Trump has brought in, particularly around immigration and the impact on the gig economy in the US, cash economy, squeezed all of that out. So, or a lot of that out. So let's see what Mr. Neil Kashkari, a hawk now on the Fed, got to say, in an hour or so. And the other key data is the University of Michigan consumer sentiment and inflation expectations later on. So have a look at that ahead of the CFTC options and futures data, where the real cash is, where the real speculators are. That CFTC data always comes out Normally 9 o'clock. Here it's saying 8:30 my time on a Friday. Many missed that, which is a bit of a shame. There we are. Another non-farm payroll. A bit of a surprise to the downside. Dollars come under pressure. Indexes, stock markets are higher. Dollars down. Let's have a look at the oil market. Oil market's held its gains from the obviously the worries in Iran. There's been this big internet blackout. The protests are spreading outside of Tehran to many of the other cities. We had the Shah's grandson, I think he is, in exile in the US, asked for people to go on the streets yesterday and today, the 8th and the 9th. Obviously, it's Holy Day today in Iran, so see how that's impacted midday prayers in Iran. That's obviously happened a few hours ago, so I haven't been following that news, but oil, very volatile. I say there's that big meeting today with in the White House. Big down days, big up days, big up day yesterday. But the trend, as I keep saying, really is biased to the downside. We need to break over 58 and break away from it. And we're still very much sub $60 for WTI, and we have been, most of the last 2 months really under November, December, and now into January. So 55 was the floor. 58 is where we're pivoting. We need to hold and break above if he's going to get positive. But you can see we're really range bound on some big candles. So again, some all algorithmic shorts, I'm guessing, around that level there, that 58.50 at the moment. See if there's any news from the meeting with Trump and those oil executives later today. The other key thing that might happen today is the ruling on the tariffs from the Supreme Court, whether the way that Trump has done it could be deemed not correct, basically, from the Supreme Court. Doesn't mean the tariffs will disappear. They'll just find a different way, and I'm sure they're working on it to keep them in place. But it's again symbolic if this situation if the Supreme Court do rule against him. Remember, a lot of the people on the Supreme Court were recommended by the president, so it's very right-wing biased Supreme Court now. But politics of the legal situation in the US, very difficult to break apart, but they try to keep the two executives branches separate. But anyway, and the other news this morning was obviously the capture of another Venezuelan another tanker with Venezuelan, what the Americans are saying, has got Venezuelan crude on, a fifth tanker now. It has been intercepted, the third one this week, this time in the Caribbean. So they locked down embargo on those tankers that escaped the initial embargo from last Saturday are being caught up with. So quite a key situation with regard to the oil prices as well. Let's just see if we've got a update on the I've lost it now. Let's just open it again on the CMC about expectations for because that was quite a significant miss. You would expect that to have moved the expectations for the 28th to the upside, and indeed it has. So remember, we were at 88.4, so it's meaning the chance of a January cut has got even less likely. It's gone to 97.2 from 88.4. As you can see here, 88.9. It said it closed yesterday. I thought it was 88, but it's been going up. So no rate change in January. March is probably about 50-50. That's probably moved a bit now, but there'll be some query. Yeah, this has gone up to 66 of a no change. It was 57 yesterday when we looked, wasn't it? There we are, 57.5, and it's now 66.8 following non-farm payroll. So that's been moving high, as you can see here, 54 blip beginning of January, 57 and 66. So no change. Has a 60% chance in March as well. Over a 2/3 chance, isn't it? 66.8 is 67. That's 2/3. So there's a 2/3 chance. No change in March as well. So the story about that we are done for rate cuts for the tenure of Jay Powell looks like that's set. The new chair, the more hawkish, dovish chair comes in May. So, and unlikely, I mean, might do something, might cut rates in the April meetings, but we're a long way. Lots and lots of data before we get to the 29th of April meeting and Jay Powell's final meeting as chair. But yeah, it might even be later today. The president, but he's had a lot on his plate, hasn't he? With all his shenanigans that have been going on this week, announcing who the new chair or his nominee for Fed chair is. That might drift into next week now. It's been geopolitical week, hasn't it? And oil, his favourite fossil fuels, meeting with his characters in the White House today. So there we go. Let's have a look at the mighty gold before we go. 4482. So a weaker dollar should benefit the gold market. So let's see how gold has moved on the data. So that's presumably the third. No, it's before actually. That's interesting. We went into this 4462 area. It's on there for a reason. I don't know why it's on there, but it's obviously put it on there for a reason. 4462 or 4463. It's 4462.93. But there we go. We went into spike that area. What we've rallied, we got as high as 4492, and then we've come back down. So gold up, following the data as we got a weaker dollar, stronger stock markets, and yields are also have moved down, but they were a bit higher yesterday, so they moved down on that as well. So if there's no questions, guys, I'm going to go and get some lunch as it's 2:00 here in miserable London as it is. The weather's awful today. It's wet and cold, but that's life in London. It's been very, very cold this week, but hopefully it gets better. Nobody's got any comments. Okay, we'll leave that. I'll leave you with the gold market. So the 5-minute is bid. There we go. Cross was a buy there. In fact, you'd have got in there. Target 1. It's come back and stopped you out. If you've on the trading that before the data, but it's bid and that's now looking to cross. So that system actually it's just triggered a short position. Or it's triggering a short position now, but be careful because we're bid. So that is suggesting, see that? So we've had a touch of the outside of the Bollinger Band and again into a key resistance area. So we go up to the time, we've got the higher time frames. You can see that's that fib level of this move down. So we ran again into this 78.6 level. See this resistance. So we've ran to that today. So that's why we're shorts run. Will we move back down to the next fib level, the 61.8 of this big sell-off we had on the 29th of December? That's what that's showing us. So if we go to that 5-minute time frame, that was triggering a short. So that's gone short on the completion of this candle. See the crosses happen there. So this is looking to short now, basically. So that is triggering a short. So this would go short there, and our initial target will be back to this Bollinger Band there at 4473. So short now at 4481, and on the 5-minute, and just follow the rules. See if we get back to this one for target 1, and then target 2 should be down as at the other side of the Bollinger Band. If indeed that goes, our stop loss could be comfortably top of that calendar there. So let's actually just demonstrate this. So that's that would be our stop loss because we've moved down quite nice. I'm comfortable there. We go actually play this if we want to go. So we go. We're going to go short. Let's demonstrate this for you all. So stop loss is 4488. So we 4488. Let's say let's call it 75. Let's do one loss, and we're going to sell it and place a sell. There we go. So that's our because we should have placed it there, but we've been filled there. It doesn't matter. So that's following the rules because we've crossed here. I mean, it may go back up, maybe, bid complete. This might be just a little move down on a. If so, we'll be, stopped out. And our first target, let's put it on, is 4472. See, this is a. So we're going to. So we amend it and put our take profit. We say it was 4472. The wherever it is, 447. Call it 4473. 4473. And we'll confirm that, and then we can and leave it. We've only got a point lot on. It's a very small position. We're out the money at the moment, so we might get stopped out quite quickly. So that move may not be moving down quickly because we're in this overbought area. This is what happens sometimes. We can stay in this overbought area for a while, and our stop loss may be a bit too tight on that, but we'll see how that goes. To the downside, so we've moved down and then it's gone so that's not looking great, but we'll see how that pans out. Following the rules. That's our. We'll come back to that, or I will come back to that, or we can come back to that later. So that's where we got in, isn't it? On that candle there, the second candle should have been candle earlier. It doesn't matter. And the stop loss may be a bit too tight. Might be better. Actually, let's just move the stop loss up to where it really should have been, which was 4491. So I'll make it 4491. That's where it should have been, technically above the at the top of that wick. That's close enough. Okay, so let's just leave that. See how that goes. Target there. You can see here TP here, target and stop loss to the downside. That's going against us, isn't it? Okay, any questions, anybody? No. So gold remains bid, dollar weaker, crypto finally back to 90,400, but struggling on that break of 92,000 we've seen this week. Take care, everyone. I'll see you Monday. I'm not quite sure what's happening on Monday. I've got nothing in this diary, but remember, next week we've got retail sales. We've also got CPI next week. That's the big one next Tuesday. CPI. I'm trying to find my calendar again, or a calendar again. Next week. There we are. Next week. So here on the this is in investing.com's calendar. No 3-star events for Monday. Tuesday is the big day, really. It's that CPI data, the core CPI data, 2.6% last time. See what that looks like. New home sales as well on Tuesday. Wednesday is the retail sales data. Both of these are relatively forward, well, not forward-looking, but key to the consumers, both CPI and retail sales. PPI as well on Wednesday, key day Wednesday. Existing home sales following the new home sales on Tuesday as well. Manufacturing production data, so big UK data dump early on Thursday. US data is the weekly claims as normal on Thursday. And some manufacturing PMIs. Oh, that's interesting. That's the not the ISM. That's the other one. Also on Thursday and Friday, we close out with a relatively quiet day with German inflation in the morning and during the day. That's playing catch as well. We have some of that this week. So retail sales, PPI, and more importantly, CPI is the key events for next week. So Tuesday, Wednesday, Thursday, the key days for data next week. And obviously, as I said, also key for the fourth quarter earnings seasons when the big Wall Street banks start to report their earnings. So take care. Have a great weekend, everyone. Be safe, and I will see you all again on Monday. All the best, everyone.